using the long call search, let's just clear out the filters. And Caleb, I don't know your approach, but let's say we're just going to go 60 to 90 days out in time to buy calls. And if you're looking for shorter term, that's fine too. I could set this, and we're going to set it. Let's set it. Let's set it blank to, let's say 22, sorry, 3 weeks out in time. Okay. So we're going to look at all options expirations anywhere from next week, the following week to 23 days out in time. In the money, out of the money, not going to worry about so much right now, Caleb. You could set that how you want, whether you want to buy out of the money options that are cheap, in the money options. But what we want to look for is something that might be considered what? Well, as you mentioned, snipe at the best entry, which would mean something that the market thinks is underpriced. And we have roughly 3 or 4 criteria that you can use that common options investors use to evaluate if the option is overvalued or undervalued. IV over HV, the implied volatility of your option divided by the historical volatility of the stock. And naturally, for option buyers, we want this to be less than 1. We're going to use less than 1.1. So we're looking for options where the implied volatility of the option can be 10% higher than the historical volatility, but must be lower. You know, if you really wanted to target something, you could put it at 0.9. So it has to be below that, 10% below the historical volatility. In addition to that, the IV over the SIV. This is the implied volatility of your option divided by the stock's implied volatility index. And the stock's implied volatility index is the average of the in the money and out of the money calls and puts for the near term for that particular security. So again, let's just put in 0.9. In addition to that, the Black-Scholes ratio. Simple thing, the Black-Scholes value, what is the expected value of the option based on the Black-Scholes theoretical pricing model? But when I'm selling options, what the Black-Scholes ratio is showing me is what is my actual bid price, midpoint price of my option, trading price of my option, Caleb, compared to its theoretical value. When I'm selling, I want that to be over 1. I want to be getting good premium. When I'm buying, I want to be less than 1. And I could use the Black-Scholes ratio SIV instead of comparing it just to the 50-day volatility of the security, the actual trading price of the option, compared to using the 50-day volatility, the theoretical price of the option using the 50-day volatility. I could compare it against the SIV, and again, I'd want a ratio of less than 1. But what do we want now? We're buying calls. You're looking for something that is bouncing off a support level. So what are we going to do? We can go in the technicals here, and I can look for a stock that is under, for example, well, let's start with a simple moving average. I want to see stocks that are, stock price that's below, let's say, the SMA 20. And I want to look for, maybe stock has been down 3 to 4 days. The number of days that the stock has been below the SMA 20, let's say at least 5 days under. Let's do that. Okay. Under for 5 days. But now I can also look for a MACD level. MACD crossing the signal. That's where we saw the blue line and the red line. But I can look for a MACD, for example, that's under the cross signal for at least 5 days or so. Okay, now this is going to show me bearish stocks, but I also want these both to be negative because I'm looking for something that's sort of coming to a bottom, hopefully. In addition to that, you can use the percent B20 as a percent of the 20-day Bollinger Band. So if we want to look for something that's near the bottom, maybe we want to say it's less than 0. It's at the bottom of its Bollinger Band. It's broken below that bottom at some point recently, Caleb. And we can also use the bandwidth. Now, naturally, we'd probably want a wider bandwidth in this case, but I'm just going to use these. And this might be a little bit of overkill for what I want to see, especially this one. I'm not sure if this is all going to combine together to work for us. But let's go ahead and submit that search. Let's see what we get. I've got a lot of Spirit. I've got a lot of Spirit Aerosystems and Spirit Airlines in there. Let's look at Spirit Aerosystems at 31.46. Life MD as well. Now, what is this giving to me? Yeah, so this is giving me something that quite hasn't hit the bottom yet. But honestly, Caleb, if I'm looking to buy calls, I might put this on my watch list. I'm going to research the stock further. Why has this decline happened? We know there's been a lot of problem with the airlines. We know there's been a lot of problem with Spirit and everything else along those lines. That one's too low. Life MD is probably not where we want to see it also, but let's take a look. Oh, it's cresting down and it's starting to bottom, but it's a low price stock. It's broken down below probably what you would have considered your last support line there. I would say it is at 475. We're down below 425. Have we bottomed yet? We're close to it. Something to maybe consider on the watch list there for a long call. But what do we know about these long calls? Ugh, they don't have any activity. That's expected. Let's add some volume in here. Let's add some open interest. I want to see some open interest of at least 0. And let's see if we could narrow down that list a little bit. Okay, Spirit there, Tandem. Let's take a look at Tandem Diabetes. It's moved up $1 today. And stock's at 37.07. I'm sorry there, Caleb. No, it hasn't formed the bottom yet. It's still declining. Might need to tweak these technicals a little bit more. We'll see what other stocks we have here. Grand Canyon Electrical, or Grand Canyon Education. Sorry, ladies and gentlemen. So you see what I'm looking for, though, when I'm doing this. I'm looking for something that's showing a bottom. This is almost a prelude to it. But as you can tell, Caleb, it seems to me that most of these have broken well below what you would consider probably the support line in this case. So I would have considered it honestly here at 136, but now it's down to 132. I'm looking for this to start happening. Once I see that start happening, that's probably going to be where I want. Now, are those options at that point going to be what we looked for? In the sense that we've got undervalued options related to the IV over HV, IV over SIV, and the Black-Scholes ratio as well. Looking for options that are considered undervalued across the market, trying to pinpoint as best we can something that has hit near a bottom or we hope is going to be bottoming soon. And yeah, these are all on the downtrend. Looking, this one I don't think I'm there yet, but those other two looked kind of decent. That they're showing me a good point. Grand Canyon Education. And what we looked at, the other one there, they're showing almost an inflection point at the end of the MACD where I would consider going in. What is the Schwab ones? One of these, not this one. I think it was the other one. But one of the Schwab ETFs had a split today, of course. So they have odd strikes now, the 0.66, 0.37. But let's just take a look at this one here. Where is that Schwab one? Is it showing us what we want? Not exactly. Again, it's a precursor to what I want. I want to see this start moving up a little bit more, probably to around 2360, 2370. Is there a higher price security in here? Let's take a look at Vanguard Bond ETF, of course, at 72.59. And one last look at a big chart there. Trailing off, it broke below the lower Bollinger Bands. It's not quite stabilizing yet. So I don't like it. Sorry. Those other ones there, the Grand Canyon one is looking like it's wanting to show me something. Life MD is looking like it's wanting to show me something. Spirit is not yet. But what are these? These are positions that have been in decline, that are still considered relatively undervalued with the general criteria options investors would use: implied volatility over the stock volatility, implied volatility over the SIV, and the Black-Scholes ratio as well, on stocks that have been declining, that have broken below the lower Bollinger Band, the percent BB20, been down 5 days or more below the 20-day moving average, and where the MACD has been 5 days below the cross signal, and both are negative. So we've found stocks that are maybe broke through a couple of those support lines at that time, but are still considered undervalued. You can do the same thing, Caleb, with the long put search. We'd look for the same option criteria, but we'd reverse the technicals. We'd look for something maybe greater than 100 days that the stock has crossed the SMA 20 over 5 or over 7 days, for example, and the MACD is crossed over that signal over 5 to 7 days, and both are positive instead of negative. And we could set that up on the long put search as well. So again, to review, you can see the price movements historically on power options of an option price compared to the change in the stock price, whether you're on the option chain, whether you found the option in a search, go to research and go to call research or put research, of course, Caleb. And you can customize the view whether you want to see the option bid or option ask price versus, say, the stock price or versus implied volatility. So you can kind of get a gauge of how it's moved or the underlying stock price. Then you can use the search tool, of course, later on. Probably use the search tool first, as I mentioned. That should be the first step to search for those options that are trending downwards that you may be seeing, looking, and hitting either the support or the resistance levels, but are still considered undervalued based on the IV versus HV or versus the Black-Scholes ratio as well. Right? So that's what we have for you. That's what Power Options can do for you. Those are the tools that are available for you, Caleb, to use to do that research and analysis. And again, I hope that was useful to you. I hope that helps you out in some way. Now, I know that you might be using different technicals, of course, than what I showed with the MACD, with the Bollinger Band, and the SMA 20. If you're using RSI, I'm sorry, folks. There we go, long call search. If you're using RSI as your support and resistance levels, you know, if the RSI is below 30 or is less than 30 or less than 20, I could screen specifically for those. Or any of these stocks, we have 43 results with that long call search that we use for looking for bottom feeders in a sense. Ooh, nothing. Let's put that back up. Let's put that technical back up. Let's put the RSI up to 30. See what we've got. Got anything in there? No. So that's not really working out to what we want in that case. I figured it would, but it's not really showing me what I want relative to RSI. Let's go less than 40. I'm surprised that they're not showing up that the RSI is actually higher. There we go. XL Energy, match that criteria we were looking for. Yeah, it hasn't quite bottomed yet, but you know, our RSI level, I could add that over here too. Let's see, lower indicator RSI. I want to go back to that to see where our RSIs were overly high. There we go. So this is, yeah, it's just about 40. It bottomed out and it's coming back up in that case, Caleb. That's interesting. Let's go back to the long call search. Let's take out our RSI filter that we used. I want to see what the RSI was in some of the sorry, I think I hit the wrong thing. Oh, that's why. I apologize, folks. I had changed all of that information. There we go. Now we're back to this. Let's try that again. My apologies. Let's go back to an RSI of less than 30. I was wondering why nothing was coming up. All right, there we go. Okay, so most of the results are still there. Let's take a look at Grand Canyon Education. Now that we've added the RSI back in. Fantastic. Yeah, so the RSI is down here bouncing off. Maybe this was the inflection point here to get in. Hard to tell, but technically it's looking like it's wanting to bottom. It's looking like it's bouncing off that low RSI. And after breaking below the lower Bollinger Band, it's wanting to come back up. But until I see that next positive signal, I'm not sure. But again, for whatever reason, these options here, the deep in the money calls, of course. But as I mentioned, you could set that to be at or out of the money. Some of the better strikes here, the 130, still considered to have a low IV over HV and IV over SP. And still has a Black-Scholes ratio of less than 1. And the stock's more volatile than the current implied volatility of these at-the-money options. Now, this is only 7 days out as well. But again, if you wanted to go longer term, 60 to 90 days, as I mentioned, you customize that here on the days to expiration. Just select all expirations here and then put in your desired time frame. Undervalued options. So you're trying to snipe the best point. Hey, I wanted to pay less than what the market thinks it's worth. That's what those filters do. Look for some open interest. And usually I suggest in these cases, look for an option bid or an option midpoint greater than 0. Putting in the option volume today doesn't hurt either. But then those technicals that we discussed, of course, Bollinger Band range, looking at something at the bottom, I want to be lower 5, 10 percentile, or less than 0. I want to be looking for positions where the MACD has been under the cross line. That blue line we saw has been under the cross line, the red line, for at least 5, 6, or 7 days. And I want both to be negative. And, the stock's been below the SMA 20 for at least 5 days. Of course, the stock is still below the SMA 20. You probably don't need both. That's what I mentioned. It was probably overdoing it in that scenario, Caleb. But that's going to give you something to look for in those positions. But the key is here, the options criteria: sniping the best price, looking for what is considered undervalued options. PowerOptions has the tools to do that for you. And then, as I mentioned, of course, always you can further research and analyze the different options there, linking to the research tool to compare this option price versus implied volatility, option price versus stock price. But those underlying technicals, they're also shown down here, but it's just easier to use in the search. The IV over HV, IV over SIV, current implied volatility range is one you could use too. You could look for options that are under 40% or 50% of their IV range, looking for something that's near the bottom of its IV range total of what you're looking for. Caleb, follow-up question. How would you use those same tools for day trading? I wouldn't. Well, I mean, you can, but I wouldn't. I wouldn't is not the right term. I don't. During the day, Caleb, I'm doing coaching sessions. I'm doing different articles. We're doing different presentations, working on different presentations, working on different products going forward as well. Usually during a Thursday and Friday, I have coaching sessions from 10 a.m. till about 4 p.m. Eastern time, 5 p.m. Eastern time if I have a full schedule. And what I found is I can't day trade. I don't have the time. I would never stop a coaching session. Naturally, I would never stop a webinar if bells and whistles go off and tell me to exit a position or get out of a position. That being said, we had a discussion a couple weeks ago. We posted it. We talked about, let's go to let's go to the YouTube channel. Sorry, Caleb. Let's go to the YouTube channel as well. And I just want to take a look at our recent videos, because there was a video that we had. Whoops, went to the wrong place. My apologies. 1 second, folks. I know you're not seeing it. I have it on pause right now. 1 quick second, Caleb. I apologize. There we go. There we go. Okay. Now, so as I mentioned a couple of weeks ago, we had there's the signature tool strike of pain based on the max pain calculation. And also we talked about what series we're expecting to see new daily options available with in the next month or two, based on what we've seen with the availability. Introduction to zero DTE trades, had that discussion. Now, in that discussion, Caleb, what we talked about mainly was credit spreads and iron condors. And in general, if I do a credit spread or iron condor for daily or day trading options, 0 day to expiration, I know that's not exactly what you're asking, but that would be my approach. But I wouldn't open any positions. And this is what I've found too with the testing that we've done since that. I've been testing. I've been paper trading and testing in real time because I can't use the historical tools to do it. I'll explain that in a moment. But I'm going to wait till about 9:50 or 10 a.m. in the morning after all the hubbub and the fluff is going on. I'm not going to try to chase premium. I'm not going to try to chase midpoints as the market's moving up and down, digesting the overnight news. We saw a couple of those things today, the different inflation reports that came out, jobs reports that came out and everything. So you get that first flux in the first 25 to 30 minutes. No. If I'm doing a 0 day to expiration, SPX, SPY, IWM, QQQ, spread, or condor, I'm waiting till 9:50 or 10 a.m. after all of that is filtered down, and I'm not trying to chase bid, mid, and ask prices. Okay, I'm just trying to get a good price, market settled down. What's the return that matches what I want? I do not day trade buying calls and buying puts. I never have. Never even tested it, honestly, Caleb. How would I use the tools? The same way. I'd be on a real-time screen. I'd be on the real-time subscription service to PowerOptions. I'd create that search. I didn't save it, but I'd create that search that I mentioned. You could jump in right away and start trying to jump and try to track the bid, ask, and mid as the stocks are fluctuating up and down. Hey, what position is looking like this? What IV, HV is low? What is going on here? What are all my bells and whistles saying? What are all my ding dings going on my back of my computer? Let me try to put in an order for this one. Let me put an order for this one. Oh, that one didn't get it filled. Oh, let me lower the bid. Let me lower the ask. Let me do this. Let me do that. That's not what I have time for in the morning. I apologize. So I don't day trade options. The research tool I showed you, though I feel it's very powerful and it gives you what you want for a call or for a put. The option research tool we mentioned, taking a look at the call option or the put option. Yes, I'm sorry, it's going to take a while to load. All the historical is updating. This is only end of day. This is not intraday. This is also why it's going to take me 2 to 3 weeks, as I mentioned, to follow up and test those 0 day to expiration iron condors on the strategies that offer the 0 day to expirations. I'm sorry, the securities that offer the 0 day to expirations, Caleb, because I can't back test it with our historical tools, because unfortunately our historical tools are all based on end of day data. I don't know what level we're at. I can't remember if it's 5 terabytes or 7 terabytes of historical data just using the end of day. If we recorded everything that we had intraday in 1 year, we'd be close to 7 to 9 terabytes of data and graphing and everything along those lines. It's almost just impossible, the amount of data. I know some have it and they only keep it for like 2 to 3 months. And the reason why is because it's too much data. It is too much related to that. 0 day to expiration testing and paper trading, Caleb, is the closest I've come to day trading options. I do not day trade options. Okay. Am I missing out on profit? Maybe. But you're looking for that perfect point. It's hard to find. Okay. And the options prices are changing. As I mentioned, if you find a stock that has dipped down in the morning because of bad news that came out, but you think it's an overreaction, that it's just hit that lower level, the implied volatility is going to be increased, and those bid-ask spreads are going to be wild. Okay, that first 5, 10, 15 minutes in the morning, they're going to be wild. You're going to be chasing that all over the place, and there's no guarantee that you're going to get the midpoint, which might still be considered slightly undervalued. You're going to be forced to buy closer to the ask price, which is going to be considered overvalued. In the case of what we looked at with the long call, with the market falling, you're trying to find that daily dip. You're trying to find that daily price. That's not now on the real-time subscription. You will see IV over HV in real time. You will see Black-Scholes ratios in real time calculated. The chart here, however, looking and analyzing this, is only shown for end of day data.